stock of the day, KMD Brands. Thought we'd, it's in the news this morning. Full year net profit slipped 0.6%, just shy of 40 million Kiwi dollars. Of course, KMD is the old Kathmandu. As cost of living pressures hits its Kathmandu segment. Revenue, though, was higher, up 13% to a record $1 billion, final dividend of 3 cents a share. Group Managing Director Michael Daly said the fourth quarter was more challenging due to increased cost of living pressures, softening consumer sentiment and the warmest winter on record. Howard Coleman, what did you think of KMD Brands, Kathmandu, the update at the moment and the share price at the moment?
Yeah, the sad thing about this company is, in fact, over the last 10 years, it's more than trebled its sales. It's gone from 310 million in 2013 to about $1 billion now, 10 years later. And yet at the same time, the profits are lower than they were when the total revenue was a third of what it is today.
Gee. So
obviously their margins are really being squeezed. They've gone from making 10-11% net profit margin down to around about 3 or even fractionally sub 3%. Not a good sign. Return on equity the last few years has been pretty poor. Earnings, as I say, heading in the wrong direction. Hasn't got an enormous amount of debt, so that looks okay, and it's dirt cheap. So for somebody who is saying to themselves maybe it'll turn around, it's only on an 11 PE, but to me they're far better retailers. None of our TeamInvest members would be enthused about this one.
And that's the issue, Howard, is if you're looking at the retail sector, we actually have some really good companies there to choose from. We're spoiled for choice.
Yeah, the fortunate thing is there's a small number of incredibly well-run retailers, and those are the ones you want to be invested in. But if we have a really big recession, many of the others will be wiped out, but they're not going to be wiped out.
No.
They'll probably benefit from all the trade that would have gone to the others who are now being wiped out. If there's only a slight recession, everybody suffers.
Yeah.
But if there's a big recession, some get wiped out and the others benefit.
Right. And they increase their market share. Andrew, what do you think of KMD Brands?
Koshing, I sort of have my traffic light system, red, green, amber, and a couple of my amber lights. In particular, Henry and I talk a lot about sort of the language that's used in company announcements or reporting. And as you just spoke about at the top of the show, the challenging outlook or market conditions, to use KMD's language. So whenever someone uses the word challenging, that's an amber light that pops up straight away. I also have a look at the daily trade. So, it's a $500 million company, only $216,000 a day traded. So that's pretty light on. So it shows you that the institutions are probably a little bit underwhelmed. Technically, it looks pretty ordinary. When we saw that chart just before, it's basically going sort of top right to bottom left. That's certainly the antithesis of what you want. And then some of the metrics that Howard was just talking about: poor return on equity, that's 6%, poor profit margin, PE is pretty challenging relative to that forecast earnings per share. So I can think of lots of reasons not to be there. It is an avoid.
Okay, all right.